Today is Sunday, October 6th, and this is another update on my progress, beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. Since my last update, I decided to sell 10% out of all of my positions except for my two short ones. It was on Thursday that I decided to make these trades. At that time, the SPY price was pretty close to crossing below the 15-day moving average, so just in case the market was about to take a slight dip, that's why I decided to trim 10%. Since I thought that it was a possibility that the market could take a slight downturn, I decided to keep my short positions exactly where they were, because if the market saw a move lower, those share prices would also be dragged down as well, most likely. If we take a look at the SPY chart, this is the point right here on Thursday in which I sold 10% out of all of my positions. I wanted to be able to lock in some of my profits just in case the SPY price decided to move below the 15-day moving average, which has been a pretty good indicator for me in the past, which lets me know that there's a possibility of a dip upcoming. Friday's move bumped us back above the 5-day moving average. That's pretty much one of the main things that I'm looking for in determining the market direction. As long as the SPY price is above the 5-day, which is above the 15, that means that the market's moving at a pretty good pace upwards. That definitely doesn't mean that on Monday or Tuesday we couldn't fall below the 15-day moving average. It would have been much more likely for that to happen on Friday though, if it were to happen, and instead the market rallied higher. The jobs number did come in a lot better than expected on Friday, so I'm hoping that that gives the market some confidence and we move higher into next week. For my end of year S&P target, on the low end we only need a 3% gain to reach that, and on the high side of the range we still need a 4.75% gain, so I definitely think that the market has some more room to run before the year's over. This is the first page of all my current positions, which is showing 13 out of 18. Right now, my top 5 holdings are General Electric, Amazon, Costco, Spotify, and Google, and those make up 27.13% of my portfolio. Right now, PayPal is up 23.39%, Nvidia is at a 21.84%, and Shopify is at 21.81%, and then Apple, Spotify, and Meta are all up pretty big as well, which made it a lot easier to sell off 10%. I'd much rather sell off 10% and be wrong and have the market go higher than to keep all of my positions the same size and have the market go lower. I've said it before, but it's worth saying again, nobody ever went broke taking profits. And this is the second page showing my remaining 5 positions. Right now, I have 72.16% of my portfolio invested, which means I have 27.84% sitting in cash. I'm leaning towards if I made any moves at all this week, I would invest more into my best performers, assuming that I think that they are going to go higher, and get my top 5 holdings closer to the 40% level that I like versus the 27.13% that it is right now. Since Wednesday, my portfolio had a gain of 0.35%, the S&P 500 saw a gain of 0.73%, and Pershing Square had a loss of 0.43%, which brings us year to date. My portfolio has a gain of 22.07%, the S&P 500 is at a gain of 21.26%, and Pershing Square on the year is at a gain of 3.87%. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.